Welcome to the Hackett Financial Advisors Agricultural Review. Thanks for joining us for our inaugural podcast. Our goal with these podcasts is to provide an audio version of the valuable insights provided by our founder and lead analyst, Shawn Hackett. Our first few podcasts will be summaries of recent reports written by Shawn. In the coming months, we will expand this podcast to provide access to Shawn's public speaking events, and when we can, we'll use this time to record discussions with other experts in agricultural business analysis. Today's inaugural podcast will review our report from October 19th. With stock market valuations now having exceeded those seen at 2000's top and now are the most expensive in history, all the justifications are beginning to come out. It's different this time because of negative interest rates around the world support much higher values. The virtual economy has far superior fundamentals to the old economy, hence values are not expensive. There is nowhere else to put your money. The Federal Reserve won't allow stocks to fall too much. Economic cycles have been eradicated by modern monetary policy, and the excises go on. We have heard this all before at prior important tops, only to find out it was just the spreading of delusional thinking by those looking to make a quick buck. Bullish sentiment has also broken all-time records recently, while some of the smartest hedge fund managers have seen up to 50% withdrawals due to poor performance stemming from their too conservative, too early views with U.S. stocks. We only mention this because stocks and commodities tend to move in opposite directions as a yin and yang of asset capital allocation. In 2000, the commodity bull market was born at the expense of the dot-com tech bubble. We feel that we are the precipice of a similar tectonic change in asset performance and relative values. Our smart money indicator is flashing a lot of buy signals in the ag space and very few in non-ag commodities. This demarcation line suggests to us that ag commodities will likely be the first group to experience the beginnings of a major longer-term bull market. Prices have been very low now for many years, and demand has finally caught up to large production and ending stocks have begun to fall. Mother Nature has also been very unusually kind over the last 5 years, which history says will not repeat for much longer. As we have discussed in earlier reports, this weather disruption period will be like no other we have seen before. It's all thanks to the coming grand solar cycle minimum, the first such event seen in over 200 years. A switch in weather patterns to accommodate global cooling versus the global warming we have all been accustomed to is not going to be pretty. Right now, our favorite grain market is corn and our favorite soft market is coffee. We are most bearish about the lumber market and feel this could be the best short for the next 12 months. For the current money flow report, subscribe at HackettAdvisors.com. As a subscriber, you'll get Shawn's most up-to-date recommendations with detailed analysis on a number of markets including dairy, grains, and the soft markets. May God bless you, your families, and the ag businesses, and to that end we say amen.